you a trader or business owner? Or anyone just wanting to learn how to be healthier, better, and more business savvy? You've come to the right place. Welcome to A Trader's Life with your host, Rick Mazer.
Hey everyone, I have Jimmy Song here. Jimmy is a Bitcoin developer, educator, and entrepreneur. He's also an open source contributor to many different Bitcoin projects and is the author of Programming Bitcoin from O'Reilly Books, The Little Bitcoin Book, and Thank God for Bitcoin. Jimmy writes a weekly newsletter, Bitcoin Tech Talk, and also has a podcast, Bitcoin Fixes This. Hello, Jimmy. How are you?
I am good. Glad to be on your show.
I'm happy to see, and I didn't say anything beforehand, that you're wearing the white hat, not the black one.
Well, this is the nicest hat I have, and honestly, I like it better than any other hat. So
okay, because I wasn't sure what to expect. I heard about this. This is becoming a phenomenon with you on podcasts, and I was wondering if I was going to get the black one or not.
No chance on the black one today.
So you're a programmer since '98, huh?
Yeah, so I've been attracted to computers like from a very young age. I didn't even really know what they were, but I was begging my dad to get me one as a 9-year-old. And my dad relented and got me a Commodore 16 for my birthday from Toys R Us. This isn't the Commodore 64, which had all these great games. This is the Commodore 16, which actually only had like 2 or 3 games. So having not much to do on that system, I started learning how to program and I was hooked. I had other computers after that and became a career. I did a lot of different startups before getting into Bitcoin, and even in Bitcoin, I did a few startups as well. So yeah, that's been my journey.
Yeah, I had the Commodore 64 and I started an internet company when I was back in 96, and I started, we did a little bit of everything back then, and there was no real manuals or education that you could get. So I was a programmer for a while. Started out with Cold Fusion. It was a company called Alaire before that. And then they changed it to Cold Fusion, did a little ASP, but I'm out of that game lately. But I definitely have a background experience. It's changed a lot, boy, huh? Since then?
Oh, I mean, significantly. I don't think anyone uses Cold Fusion anymore.
They do. Believe it or not, there is a little bit, but no, it's dead. It's dead.
Well, it's like a bank running on a mainframe or something like that, right? Like you want to virtualize it as much as possible because keeping that stuff up is actually very difficult.
Right, exactly. Well, I wanted to have you on here. You're the Bitcoin guru. I did read one of your books and it was just phenomenal. We're going to talk about that in a little bit. But before we could talk about Bitcoin, I think we need to understand how the current money system currently was and is to better understand why Bitcoin may have come about in the first place. And I was hoping you could just explain it a little bit, kind of like I'm a 7th grader, because some nice people need that.
Okay, well, you're asking about why Bitcoin exists, period, or how it came about?
To start with, how the current money system is and how it maybe has changed over the years and how we got to the point where maybe there was a need for Bitcoin in the first place for somebody to develop it.
Yeah. So the current monetary system is what we would call a central bank-backed fiat monetary system. And that's a mouthful, but all of those words actually mean something. So a fiat money system just means that it's not backed by anything. There's no convertibility to the money. And that sounds strange because nobody actually thinks of converting their money or their dollar bills to anything else. But it used to not be that way. For a long time, it was that you can trade your dollars for gold. It was convertible, as they would say. Or in other countries, it would be convertible for silver. Even in the US, it was convertible for silver for some period of time. The reason why it isn't anymore is because it simply got too expensive. They kept expanding the money supply and it got too difficult to do that. Now, how did all of that come about? Well, the Federal Reserve is the central bank of the United States, and it was established in 1913, ostensibly as a way to sort of better manage the economy. This is sort of the conceit of central bankers everywhere, that they can somehow prevent disaster by managing economies with their sort of iron fist, if you will. Of course, that isn't the case, and all evidence points to the fact that they are the cause of most of these economic disasters that we see every 10 to 12 years. Most recently, last year with the pandemic, before that 2008, before that 2001, before that 92, before that 87. I mean, like, we could keep going, right? There's just every 8 to 10 years, there's just something that happens, and it's sort of like inevitable. So that's the ostensible reason why central banks were set up. But even when they were set up, originally, you could convert your dollars to gold. So you could go to any bank and give them $20.67, and they would give you 1 ounce of gold. That's the conversion ratio that you had for a long time. Everything changed in 1933 with Executive Order 6102. This was by Franklin D. Roosevelt. It was an executive order. He didn't need permission of Congress. I don't think he would have gotten it passed, even with the very liberal Congress that he had at the moment, to actually do a bill like this. But he made it an executive order. Essentially, he said private citizens cannot own more than 1 ounce of gold. So he seized all of the gold. Now, most private citizens didn't like that. So if they actually held gold, they refused to turn it in. And the government wasn't going door to door and like trying to seize gold from people's houses. They didn't really do that. But a lot of the gold was in the banks because you could always convert it for $20.67 per ounce. Instead, they just took all of those and said, hey, these are all ours now. And the ostensible reason why they did that is the reason why all these governments sort of want to get off the gold standard, if you will. It's to expand the money supply, because by 1934, just a year later, they revalued the dollar to $35 an ounce. So it went from $20.67 to $35. So he expanded the money supply essentially by something like 50%, just with a stroke of a pen. And all of the people that held the dollar, they got diluted by something like 50% overnight. So that was what happened in 1933, 1934. World War II comes around, and because most of the fighting was in Europe, some in the Pacific and so on, everybody needed American manufacturing. A lot of people are familiar with World War II history, would know about Lend-Lease and so on. But essentially, all of these countries needed goods from the United States. And how are they going to get them? Well, they had to pay for it, but you're not going to accept their currency because you don't trust their currency. They had to pay the US in gold. So as a result of all of the fighting being done in Europe and the Pacific, a lot of the world's gold ended up in the United States. So by 1944, when the Bretton Woods Agreement happened, the US had enormous leverage. So the Bretton Woods Agreement was a meeting by the top officials of every country. And their explicit goal of that conference was to set a new monetary world order. Like literally, that was it. And if that gives you chills, it should, because they were trying to decide on behalf of the entire world what like the money system was going to be. The US had enormous leverage, again, because a lot of the world's gold, I think at the time it was something like 75% of all of the world's gold was in the United States at the time because of their manufacturing capability and all of these other countries being at war. And the balance of trade was such that the US ended up with most of the gold. So the US had this enormous leverage. And part of the Bretton Woods Agreement that they were able to on everybody else was, okay, instead of holding gold in your vaults, I know all of you guys want some gold, right, in your central bank. We're going to make it so that you just put dollars in your vaults. And trust us, we're good for it. Anytime you want to convert, you just ask us and we'll convert it for you at like $35 an ounce. And you can see where this story is going, because like the bank saying, oh, anytime you want to convert, it's $20.67. We'll do it. It only worked up until 1971 when France was threatening to convert a lot of its dollar reserves to gold, sort of seeing the enormous spending that the Nixon and Johnson administrations had done with Vietnam and social welfare programs in the United States. They were like, there's no way you can afford this. And there's probably not enough gold to back up the dollars that you have, so we're going to convert it to gold. So Nixon just said in 1971, we are going to temporarily suspend the convertibility of gold. He said temporarily, but of course it wasn't temporary. It just stopped forever. So from that moment, everything became just fiat money. And amazingly, the world continued on it because in 1970, the dollar essentially became the only way to buy oil. So this is where we get the petrodollar moniker. Starting with Saudi Arabia, the US was able to convince a lot of oil producing countries to sell oil only for $1. So no country can sell oil for non-dollars without facing some heavy sanctions or US reprisals or something. One of the unknown facts about the first Gulf War is that Saddam started selling oil for actually the second Gulf War. Saddam started selling oil for euros right before all of that happened, which kind of makes you wonder, 2003, what was actually happening? Similar thing in Libya. I believe Gaddafi was selling oil for gold before he got. So geopolitically, the petrodollar is enormously important to the United States, and it's part of how it keeps a hegemony or monetary imperialism over every other country. But all that said, the current system is based on central bank-backed fiat monetary system. So the central bank is what they call the lender of last resort. And how that works is that the government has a budget, right? $6 trillion budget, something like that. Their tax revenues are $3 trillion. Where does the other $3 trillion come from? Technically, what happens is that the Treasury has to now sell $3 trillion of treasuries or federal bonds. And they sell it out into the market. Now, some of it sells to the public. Some of it sells to other foreign central banks who like to keep it in that instead of dollars because at least it gets a little yield. But if not all of it gets sold, well, the lender of last resort steps in and buys it. Now, where do they get that money to go buy it? Well, they create it at thin air. So they add additional money to the money supply to take in the, say, $2 trillion worth of treasuries that nobody bought. And this is one way in which money expands, but that's not the only way. There's also at the commercial level. All these commercial banks also create money out of nothing. You might think that so say there's a corporate bond that pays 3% over 15 years or something like that, that there's when a bank is, when you think about it, those aren't very good investment terms, right? Who's actually buying this? If I want a 15-year investment, I'm going to want way more than 3%, especially if there's even a little bit of credit risk and so on. And 3% isn't very much. So who's actually buying this? Well, it's commercial banks. And the thing is, there's nobody that it's not coming out of somebody's savings. It's coming out of nothing. They create money to buy those bonds. Similar thing with your mortgage. Again, if you think about it, 3% over 30 years with some credit. No one is giving up their savings and thinking, oh, this is a great investment. I think I'm going to go do that. There are exactly zero people that want that kind of risk. It's usually a significant amount of money, somewhere between $250,000 and $1 million or something like that. And you're going to have some credit risk. You're not going to get paid off until 30 years from now or something like that. There's just way too many variables, but it's created on behalf of these people. It happens all day long because the bank creates it on the mortgage borrower's behalf. So this is how money sort of comes into existence in the current system. And as I write in my book, Thank God for Bitcoin, it's a cesspool of theft, cronyism, and corruption. And it's got some insane moral problems with it.
So correct me if I'm wrong on the year, because I'm not 100% sure. Wasn't it around 71, 73 when the gold was decoupled from the dollar? It didn't have to be backed by the dollar. Yeah. So essentially that allowed them to print unlimited money. And that's what started the escalating debt to GDP ratio that's been skyrocketing over the years, right?
Yeah, I mean, a lot of things happened in 1971. There's actually a wonderful website, WTF happened in 1971. And you can look at all of the different things that sort of started to go crazy right around 1971. You see the financialization of the economy, people that aren't inventing or creating new goods or services, but people that are in finance, that are moving money around, become richer and richer, right? Those are the people that tend to benefit in situations like that. And that's what we see 1971 to pretty much the entire decade of the 70s. The US is paying for all of the sort of money printing that they essentially did in the 60s and early 70s through the Vietnam War and all the Great Society programs, it comes to a head and we get some insane amount of inflation. The 70s decade as mostly like this decade of just unending inflation and very high unemployment on top of that. And that was partly due to all of we had to pay the piper basically. Like we spent all this money in Vietnam. We spent all this money on social programs. Well, like, what you think was going to happen? That you didn't have to pay for it? We also saw like the oil shortage and stuff like that. It was because not a lot of people sort of understand like where that came from. The oil was becoming dollarized. So a lot of countries started holding back oil as a way to keep their reserves. It was like the dollar, except it had different properties. So it was a very good hedge and a store of value for a while. So of course there was a shortage and we had all these like long gas lines and stuff like that. So the 70s ended up being this very interesting decade where, you know, a lot of things just sort of started changing very quickly. And it ended up changing American society significantly going forward.
Well, I hope that they didn't see me coming because I was born in 1971. So maybe that's when this all started, but dating myself a little bit. And I know a lot of people that had bridge loans and mortgages back then. They were telling me 17% interest rates and things like that, which is crazy.
It is, isn't it?
Well, when you think about now, people are getting 2.5 and nobody's really complaining about 2.5, but
the thing is, if there's a picture that I've seen on Twitter of like the prices at McDonald's, and I think it was 1971. Yeah. And it was like 5 cents for a cup of coffee, right? Yeah. And like 15 cents for a hamburger and things like that. And you're like, okay, 17% inflation makes sense, or interest rate there at that point makes sense, because like through the next decade, things got a lot more expensive.
But I don't know if it even really matters anymore. You know, I'm a day trader and the market's been going up. And now today it was just announced that we're recording this January 10th, 2021, just so everybody knows, or June 10th. But inflation is going up. It was just announced today. It's the highest since 2008 spike. Yet the market's just made another all-time high today. So I find it's very interesting that they just shrug off the high debt. Nobody cares. Eventually, it's going to come to a fruition at some point, I would suppose.
Yeah, and this is the question everyone has to ask: is, okay, well, where do I put my money? Right. Because you don't want to put it in the dollar. The empty money supply has gone from 15.5 trillion to 19.5 trillion in the space of like 9 months. Like that's an expansion of like 35%. This almost as bad 1933 to 1934. We're also seeing like, okay, well, I guess you could put it into the stock market, but there's no yield anywhere. Nobody's paying any dividends that are worth anything. It's like 1 or 2%. Where are you going to go? Bonds? 1 or 2%, right? Like you're not going to get any yield there either. What are you going to go into real estate? Like there's no inventory anywhere, and like days on market is like single digits in many places in the country, and you're going to have to pay 30% above asking to even be considered. Where are you going to put your...
Here's a new phenomenon: buy some Bitcoin.
But this has been my argument, is that all of these things have some inherent level of risk to them. Stocks can have fraudulent directors. They might be cooking the books. They might not get the drug that they've been working on approved by the FDA. If you're in a real estate market, that suddenly becomes less popular, or there's a huge tract of new housing that comes online or something like that. You don't know, right? Like there's risk.
So explain to me and to everybody who's listening, because everybody's heard about Bitcoin and blockchain and all this other kind of stuff, more Bitcoin than blockchain and cryptocurrency. But a lot of people don't really understand what is Bitcoin, what is blockchain, what is the difference. They get confused. Can you give me just a brief overview of that?
Yeah, so the easiest way to think of Bitcoin is digital gold. And the reason why I say that is because a lot of people are familiar with gold because it was money for thousands of years. And the reason it was very good money for thousands of years is because it stayed scarce, number one. And number two, it had a lot of other properties that made it relatively easy to divide, relatively easy to transport, relatively easy to identify and recognize and things like that. So gold is also decentralized in the sense that if you own some property, you can feel free to go dig for gold on your property. right? There's nobody stopping you. If you own some land somewhere, like I own my house, so I can go to my backyard and start digging for gold. I'm not likely to find any, but I have the right to do it, right? And that's how sort of like gold works. You don't need anybody's permission to go produce it. Contrast that with the US dollar. If I start printing $100 bills out of my basement, I will get arrested by the Secret Service because that is illegal. Only the Treasury is allowed to print $100 bills, and only the Fed and commercial and retail banks are allowed to expand the money supply through lending. So in that sense, it's like gold in that it's credibly scarce long term and it is decentralized. Those are the two properties that we're getting there. But gold is physical. The nice thing about digital things is that it's very easy to transact across space. So I can order something from Amazon, which is based in Seattle, and I can pay with my credit card, which is natively digital, so I can, pay for it, and they will ship an item to me, and I'll have it on my door like 2 days from now, and it's great, right? I don't need to physically transfer something. It's not like 1997 eBay where you actually had to like mail a check over to the other person.
Yeah.
They would have to cash it and then they sent you the item. It's not like that anymore. There's no physical exchange required. And being digital gives you that ability to do things very quickly and conveniently across space. So Bitcoin is digital gold in the sense that it's both decentralized, credibly scarce long-term, and it's digital. So it adds this very nice quality of being able to like essentially transfer this value very quickly over a large amount of distance. And it's very useful because you have the ability to pay somebody like halfway across the world in about 10 minutes. And that allows you to not only buy goods and services from very far away, but more importantly, it's much easier to secure yourself. So if you had like a 400-ounce gold bar, that is very hard to secure. And in fact, this is why sort of like centralization of money happened in the first place. Money used to be gold, but people didn't like having to secure their own gold because then a robber could come into your house and take it. And so they put it all in one place where, somebody that knew a lot about security can just secure it themselves. These were called banks. And they would have thick steel doors. They would have armed guards and so on. And modern ones have like motion detection systems and all kinds of really cool ways to secure their vaults. But that's what they were there for originally. And this is one of the weaknesses of gold is that it's very hard to secure. With something digital, it's actually much easier to secure. It's like having a 400-ounce gold bar in your house, but instead of having thick steel doors and motion detection systems and armed guards, you have a hardware wallet, which is like $100, and you have the same sort of like equivalent security than you would with a bank, basically. And this is why we call it, like in Bitcoin, you can be your own bank. You don't need to sort of outsource the security of your stuff. And it turns out that whenever one entity is trusted with a lot of things, they run into a lot of moral hazards and they abuse their position for their own benefit, which is what a lot of these banks did. They started doing what was called fractional reserve lending, and they would go bankrupt as soon as there was, quote unquote, a run on the bank, which in turn would mean that a bunch of depositors would lose their money. And essentially, the current fiat system is already bankrupt because they're issuing debt out of nothing with nothing backing it. But yeah, that's the comparison between the two systems.
And then Bitcoin is built on top of the blockchain platform. So the blockchain is a platform which Bitcoin operates on top of. Is that correct?
Well, so the blockchain is really it's literally a chain of blocks. That's why we call it a blockchain. And if you think about Bitcoin, you can think of the ledger at your bank, right? Like when you go deposit money at your bank, what does the bank do? It doesn't go and say you deposit $100. They don't go take your $100 and put it into a drawer labeled with your name, put it in there. That's not what they do, right? Like they take the deposit and they update a ledger. It says, plus 100 to your account or something. And if you use a check to pay somebody and somebody comes to cash that check, what happens? Well, they debit from your account and credit their account, right? That's how the ledger works. The blockchain is just the ledger for Bitcoin. And it literally has every single transaction that that has ever occurred on Bitcoin is in that blockchain. That's it. That's all it is. It's a ledger of every single transaction that's happened in the last 12 years of Bitcoin. So 12 years of history, and the nice thing about having that is that now it allows anyone that wants to audit the entire thing, right? You don't have to trust anybody. You can just go in and audit everything and say, okay, is the amount of Bitcoin increasing at the right rate? Is anyone cheating? Is anyone creating Bitcoins out of thin air?
Well,
as that's an important quality that you can actually verify. Try doing that with the Fed. Not going to happen.
I had a question about that. We're going to get to that in a second because that's very important. So Bitcoins, we hear a lot about miners and Bitcoin mining, and that's pretty hard to do these days, isn't it? You need a lot of resources to do that.
Yeah, it's like, and this is similar to gold in the sense that I'm told that in order to mine 1 ounce of gold these days, you have to process somewhere around 40 tons of dirt and rock. So, I mean, you need to crush it and process it with some chemicals and so on. So that's a lot of dirt and rock for just 1 ounce of gold. But once you find that ounce of gold, it's very easy to verify, right? Like there are chemical tests and touchstones and things like that you can use to test, okay, is this actually gold or not? And Bitcoin mining is very similar in that it takes an enormous amount of the digital equivalent of dirt and rock, which is basically numbers. You have to run lots and lots of numbers in order to find your 1 ounce of gold, or if you will, or the digital equivalent. But once you find it, it's very easy for anyone to verify. In fact, your cell phone could do it in less than a second, right? Like it can just... Okay, yeah, that's definitely sufficient, what we would call proof of work. And that's the key to how the whole system runs, is that you don't need to trust anybody. You can actually go and verify yourself, which is amazing.
It is amazing. Besides the fact that there's much easier ways currently to pay in the United States, and I know it's probably more widely used, I believe, not in the United States. Why are more stores and things like this not accepting Bitcoin? And what do you believe will have to happen or will happen for people to actively seek to take the coin as a payment in more of a widespread fashion?
Yeah, great question. So the reason why is because a lot of Bitcoiners don't like spending their Bitcoin. They would much rather spend their fiat money. So 2014, 2015, there were a ton of companies that just started taking Bitcoin. So Overstock was one, Expedia was another, Dell was another. I think even Microsoft store might have taken it. There were a ton of stores. And the thing that they found is that initially you get a little spike because people wanted to support them. But then it would just sort of peter out. And then like the engineering costs of keeping it up just wasn't worth it compared to like all the tiny amount of business that they were getting. And if you think about it, it makes sense because 2014, Bitcoin was like $400.
I bought two at 500. And sold them a long time ago, unfortunately.
Well, so that's the thing is that every time you buy something with Bitcoin, you're essentially selling Bitcoin. So
right. I didn't think about it that way, actually. It's a good point that you made. Why people don't want to part with it because they're holding it, so they're going to just use their credit card to pay.
Yeah. And this is a thing that a lot of Bitcoiners have learned over the years. So the story I like to tell is 2013, there's a new store online that's accepting Bitcoin, and it is a beef jerky store. I love beef jerky. So I was like, okay, you know what? I'm going to give them some of my business. And I think Bitcoin was around $400 at the time. So I bought $100 worth of beef jerky. I'm like, all right, let's go get some beef jerky, support this store. They sent it to me and I ate it. It was delicious. I loved it. But that cost me a quarter of a Bitcoin. Quarter of a Bitcoin right now is about $9,000. That wasn't $9,000 worth of beef jerky. You know what I'm saying?
Was $18,000 a week ago.
Yeah, and 5 years from now, it's probably going to be like $40,000. I don't know. Right. And that's the thing is every time you spend Bitcoin, you end up regretting it. That's just how it is. So this is why like a lot of merchants that sort of started taking Bitcoin, I mean, they were converting it for fiat money anyway. They didn't actually like Bitcoin. They liked sort of like the publicity that it gave them, sort of the perception that they were on the edge of technological, I don't know, frontier or something like that. And But they weren't actually keeping it. The people that actually like do take Bitcoin, that are serious about it, they will only take Bitcoin. So I have a seminar, Programming Blockchain. I teach developers how to program Bitcoin, or teach them all about the protocol. I will not take fiat money. I want Bitcoin. And this is something that I require because I don't want to deal with the fiat system. If you know anything about starting a business, like getting the payment gateway set up and all the like little charges and fees that everybody takes, it's a headache I don't want to deal with, right?
Right.
Like once in a while, people be like, please, can I pay with PayPal? And I'll be like, all right, I'm gonna charge you like 10% more. And they're like, okay, I'll do it. But like most of the time, I'm like, okay, if you're that desperate, just go buy that much on Cash App and then send it to me. Like, what's the big deal? It's not that hard. But like people are like that sometimes. So I think to answer that part of your question, for merchants to really start getting on board with Bitcoin in like a major way, they have to start demanding Bitcoin and Bitcoin only. And their good or product has to be so good that there aren't any other alternatives to getting their product other than through them. And that does tend to happen in times of inflation where we're seeing a lot of shortages right now, right? If you have lumber, you could probably sell it for Bitcoin and demand Bitcoin for it, right? Like if you have copper, if you have aluminum, if you have plastics, if you have silicon, if you have computer chips, if you have computer chip fab capacity, or any of those things, you could probably demand Bitcoin and get paid for it in Bitcoin. But, that's further down the road. And the sort of like lesson that you can take is from Venezuela, where obviously the bolivar is going insane. If you go to the black markets there and you try to pay in bolivars, they're not going to take it. They want dollars or sometimes Bitcoin. The reason is because if they take the bolivars, by the time they get around to converting it to something more stable, it's going to have lost its value. So they don't want it. And they refuse to take that. Now, the US dollar is nowhere near that, right? But it's also naive to think that it can never happen. And I believe that at some point in time in the next 20, 30 years, a hyperinflation scenario is entirely possible.
Hey everyone. This episode is brought to you by Futures Trading Coach. If you're a day trader or thinking about trading the financial markets short term for a few hours a day, definitely go to www.futurestradingcoach.com and check out what they have to offer. That's Futures Trading Coach. Right. And I think I've been looking at this the wrong way because I always thought Bitcoin would not really be able to rise in popularity unless it was taken everywhere, like in stores and things like that. I never really looked at it as more of a digital gold where people are just, so it doesn't have to really be taken in a bunch of merchants and stuff like that in the United States. People will just want to accumulate it essentially.
And the thing is, there's a lot of technologies for method of payment, right? Like there's not just credit cards. There's now like Venmo and Cash App, Apple Pay and Google Wallet, and internationally there's like M-Pesa and Octopus Card, WeChat, and like there's just so many sort of quote unquote convenient ways to pay. And they do make it have less friction, but that's not really that important per se, especially because like for Bitcoin to fill, because all these other things already do it. And as my friend Safedine likes to say, there's nothing stopping any of these companies from settling in Bitcoin, right? Like Visa already supports like 35 different currencies. They could very easily add Bitcoin to that list and just settle in Bitcoin. You can do the same thing as PayPal or as Cash App or even WeChat if they wanted to. It's not hard at all. The technology for making sure that everyone can take it isn't what's needed in the market. What's really needed in the market is store value. And on that front, there's just so few choices for people. We were saying earlier, we have pretty much like stocks and real estate, maybe gold, and that's it, right? Like where else are you going to store value?
Is there any truth to the fact, in your opinion, that some of the companies have not really put forth a bigger effort because they're worried about the government? And I know it's been discussed a lot, but the government somehow, they don't like Bitcoin or they're going to ban Bitcoin or something like that. And I know that wouldn't be easy to do, but I know, for example, the Fed just announced something recently that they were going to like start their own coin because they can control the currency that way. And some people even said they're going to say it's a national security issue where their job is to manage the money stability. And if they allow people with Bitcoin to just use their money untracked, essentially, that could somehow be a problem. I mean, do you have any thoughts about that?
Yeah, I mean, they can try, but I have a hard time seeing how they would actually do it, right? Like, it's decentralized, so there's no central choke point that you can just go to and say, well, you're not allowed to do this anymore.
What about Coinbase? They're already starting to ask Coinbase for user information and to track who's depositing money in there and stuff. So isn't that the start?
Yeah, I mean, that's an exchange, and they are, of course, centralized, but no one has to use Coinbase. You can possess it yourself. You don't have to use Coinbase for anything, really, if you don't want to. You can go trade peer-to-peer for cash if you want. And I've done this in the past where I go and either buy or sell Bitcoin to like complete strangers that I meet in a marketplace online or whatever. And this is entirely possible. We do this all day long on eBay. And it's entirely possible to do all of these actions. So again, we come to this point where, okay, well, what would that actually look like and how would they penalize it and what would be their justification and so on? They could try, but I don't really see an effective sort of way to prevent it. Like the Executive Order 6109, supposedly that made it illegal for any U.S. citizen to hold more than 1 ounce of gold. But a lot of people that held gold, they were like, I'm not giving it to the government. I think what they're doing is immoral and this is a complete seizure. And they kept it back. And of course, their gold was worth 50% more later, like a year later when the Congress passed the bill saying it's now $35 to an ounce. So, I mean.
But wait a minute. So let's say that you're a business owner and you take Bitcoin and you collect it as revenue for your business. And then you go and spend it to buy groceries somewhere and you don't have to have her pay tax.
I think you do when you spend it for groceries, I think.
Well, you would pay sales tax, but you're not paying tax on.
Well, that's a taxable event now. So
it's technically a taxable event, but how would anybody be able to, how would they know?
Yeah, you're supposed to self-report it. This is one of the advantages of somewhere like El Salvador. You wouldn't get taxed that way there because it's legal tender.
Right.
So if you spend it there that way, then it's actually better. But yeah, unfortunately, the US doesn't have that legal tender law, which I would like to see, but it hasn't happened, at least not yet.
So the next question I have deals with this conception that Bitcoin is, anonymous. And I want to bring up the current Colonial Gas, the pipeline hack that came up. Again, we're recording this June 10th of 2021, which they got paid in Bitcoin. And apparently the government was able to recover most of the money. And they're saying that they weren't very good hackers. They didn't really cover their tracks as much and stuff like that. But, the question then becomes, is there something that they could have done better how is it that the government can just come in and find the fact what wallet they paid for and recovered the money?
Yeah, I have no idea how much of this story is true.
Right.
A lot of things just smell a little off here.
I agree. I'm just saying what's being reported in the media, but exactly. I don't know either.
Well, so first, this was what's considered a ransomware attack, where they infect a computer and say, if you want the data, it's encrypted, pay Bitcoin to this address, or else you will never see it again. And who knows, maybe there's some sensitive data in there, some private keys that you need to unlock certain servers or something like that. But whatever was important enough that they actually paid it, supposedly. And then what the FBI apparently did was track the Bitcoins to some cloud storage, cloud server somewhere, was able to subpoena the cloud services company, go in there and recover the coins or something to that effect. Anyway, a lot of it just sounded fishy to me, just given the terminology they used, the claims that they had, it didn't really add up. The thing I would caution about any of these press releases and what's quote unquote being reported is that it's really hard to tell what's true and what's sort of made up. It's entirely possible that this was a ransomware attack. It's also possible that it was an internal hack by an employee, right? That it was a disgruntled employee that hacked his own server and said, hey, it's some ransomware and we have to pay this guy or whatever. And what the FBI might have done to make themselves look good is there's no real incentive for transparency in these things. Most of the people in any sort of press release, all they want to do is look good. And that's it. There's no real desire to put out truth. And if you doubt that, Think about the kinds of people that are in these positions. They're politicians, right? And what are politicians known for? Lying to make themselves look good, right? Like
True.
I mean, that's what these things are filled with. So I'm very skeptical of these claims and like whether they actually recovered it or not. It really wouldn't take much for them to show that they actually recovered it. There's a way to just point to an address, show us that it's there, and sign a message saying, we, the FBI, recovered these coins and we now have them in our possession. Something like that. Sign that. It's cryptographic proof right there. And everybody in the Bitcoin community would be able to verify it themselves and say, okay, this checks out. The money is there, and the FBI, it does seem to come from this trail and so on. Like, it would be very easy, but they haven't done that. So for me, it's like, oh, I'm going to suspend judgment and be very skeptical until they do.
Well, that's why I wanted to ask you, because you would know. I mean, if your BS meter is going off a little bit or whatever. You saw Coinbase did their IPO. That's interesting. Way overvalued, in my opinion. I don't think that they can sustain that.
Yeah, I mean, this is the thing about every stock in the stock market is that they are all way overvalued. I was saying the other day, Amazon has never paid a dividend, and they have no plans of ever doing so. Now, they're getting bigger and bigger. This is true. But this is a stock that pays zero every. What is that actually worth? Like, as an asset, as an investment, if you're getting no returns on it year after year, it should really be worth zero. But because there's very few stores of value out there, people use it as a store of value, and it gives it this enormous store of value premium, which Amazon takes advantage of and grows even bigger. And this is the case with every other stock. So many stocks that even like there's this phenomenon of meme stocks, like stocks that are bankrupt or have very low prospects for growth. It's pumping because people want it to pump. It's not at all about the fundamentals or the reality underneath. So, I mean, Coinbase to some degree is part of that, but I mean, it's by no means like the most. I think everything in the stock market is overvalued, that it had, with the possible exception of something like MicroStrategy, which holds a lot of Bitcoin on its balance sheet. Pretty much everything else is people trying to store value somewhere, finding very few places, and just hoping that there aren't others. People don't put it into something like Bitcoin.
You're not going to catch me buying that anywhere. I feel like the spreads, how they're making their money with the payments and the conversions, are going to come in, and they're going to get tighter as when more people enter the game. And I think they're just betting that the growth of the cryptocurrency is going to outdo at a faster pace the fact that they're going to be making less money per transaction. And I don't see that happening in the near future. But again, I don't play those anyway, so it doesn't matter. But talk to me a little bit about NFTs and digital rights management, DRM. Because I'm not, I'll just let you know, I think we talked offline or in the beginning of the conversation. I started an internet company back in 96, and we were one of the first ones to do digital rights management using a company called Real Networks. So when I heard these terms about non-fungible tokens and the way it works, I'm just like, this is just like DRM. Yeah. I mean, now there's a technical side to it, which there's centralized and decentralized and all that. And then there's the end user kind of experience with both of them. So I don't know, do you have any opinions on that or anything?
Yeah. I get DRM. It at least gives you a right to something, right? Which is the right to listen to the song or read this book or watch this movie or whatever. And that, like, we can argue about whether or not that's like a legitimate right that's available to be sold or whatever. But regardless, at least we understand what it is. Here's the thing about NFT that's absolutely insane. It's not the bits on disk, right? Supposedly, like Beeple's art that sold for $65 million or something like that. It's like a 5 gigabyte JPEG. So it's a very large JPEG, but you can go and download it anytime you want. Press right click, save as. It's not the bits on disk, clearly, that you are buying as a buyer of the NFT. It is also not some sort of copyright or digital right or anything like that. It's not like, okay, now that I have this NFT, I have the right to make t-shirts with that NFT and sell it at a profit. That would be something valuable in the market. It would be like a patent or a copyright to a song or something like that, which people value for a good reason because people like them and you can commercialize them, make money off of them and so on. What it actually is, it's literally just a ledger entry. It doesn't even point to anything. It's a ledger entry made by the artist saying that it's supposed to represent this piece of art. So it's a ledger entry with a pointer to the actual piece of art.
Well, why would somebody pay for something like that?
Very good question. Like logically, it makes no sense, but with enough sort of hype around it and enough sort of like greater fools, it does end up that a lot of people get caught in the wave. And of course, you have lots of celebrities that are promoting their own quote unquote NFTs, and fans like to feel like they're closer to their celebrities by buying stuff directly from them. I don't understand why they don't like just do the same with like shoes or, you know, jerseys or something like that. That's way more honest than like, hey, I'm gonna sell you an NFT that I'm just gonna assert out of nowhere. That it doesn't make any sense. I mean, it wouldn't be very hard for Floyd Mayweather to sell the boxing gloves from his latest match at auction or something like that, and like make a bunch of money for himself. What?
Right.
Like that's way more honest than an NFT, which is to me the scammiest of the scammy.
Right. I agree. Interesting. So if a business wanted to accept Bitcoin as payment these days, I had a storefront a few years back that online, and I used a company called BTC Pay, and I put up my own server. I think I used Luna Node or something like that, downloaded the full ledger or whatever, or maybe not the full one. There was an option to do partial or something like that. I don't remember. And it would settle through that. I mean, are there easier ways for businesses to take these days that you could recommend?
Yeah, I wouldn't recommend BitPay. I think BTC Pay is a free open source alternative, and it supports a lot better protocols and is more robust and so on. And it's free. It's open source. And
the one I use, that's the one I use, BTC Pay.
Yeah. BitPay is not a very...
No, I called them to get information, and I never even got any reply.
They're moribund semi-zombie company at this point. A lot of companies that they're now going on like 7-8 years, and honestly they're a little long in the tooth. They haven't had any innovation in this space for a while. They lost a lot of good people that they used to have and so on. So just not a good place for them.
And it's not that easy, even because I know when Bitcoin first came out, a lot of people said because of the fractional nature of each coin, how you could, buy it and use it, that micropayments were going to be big with Bitcoin. But because of the cost to settle, that really hasn't been the case. So I don't think that's really going to take off anytime soon.
Well, on chain, yeah. But Lightning, you can do micropayments all day long.
I was going to ask you about Lightning. Talk to me about Lightning Network too, because we get that question a lot.
Yeah, so Lightning Network is basically a way to compress a lot of transactions into a single one. So imagine if you and I were doing a lot of business. So I send half a Bitcoin, you send me 0.2 Bitcoin, and then you send me 0.1 Bitcoin, I send you 0.1 Bitcoin. And we do like 100 such transactions. We could put all 100 transactions on chain, or we can just settle up at the end of the day and do what I think traders call like technical netting, right? That's basically what you can do. And that's very useful because then you only have one on-chain transaction representing however many we did. And that could be 50, 100,000, who knows? Now, that in Lightning is what would be called a channel. It would be a channel between you. And and if I have a channel open with somebody else, say Bob, then the nice thing is not only can I transact with Bob many times a day or whatever, but also, Rick, you can transact with Bob as well, because you can pay me and I can pay Bob, and that would end up being you paying Bob. I would net out to zero, and that would be it. Maybe I take a tiny fee for the routing or whatever. And now we start to have a network. And if Bob is connected to Alice, now, Rick, you can pay Alice through both me and Bob, and that would be a route of 3, and you would be able to do that. And you can have a very large network of nodes, and this is what we would call the Lightning Network. It's literally a network of channels where you can pay each other in small doses, and it works just fine. And you can compress a lot of transactions into small amounts, and it's a little more private because only the in-between nodes have any idea of what's going on, and the rest of the network doesn't find out about it, unlike on-chain transactions, which are recorded in the blockchain for all time for everyone to see. So Bitcoin has Lightning as its second layer. And a lot of people are using it for some really interesting use cases. So something like Sphinx Chat and Breeze app are two that I really like. Sphinx Chat is like a group chatting thing. If you've ever been on Telegram or WhatsApp groups or something like that, it's similar to that. Except to prevent spam, first of all, you have to pay to join a lot of these groups, which is good.
Yeah.
That way, if you're going to spam, it's going to cost you some money. Also, a lot of them have the staking feature where any comment that you make, you have to stake some sats in order to make it. So it might be 100 sats or something like that. That's not very much money, but 100 sats to to say something on the chat. And if your comment is judged to be trolling or spam or by the admins, they keep it. Otherwise, it gets returned to you after about 12 hours. So it's to keep the quality of conversation in a group chat high. So that's one application that's come out of it. There's another one called Breeze App's podcasting module. So Breeze is a wallet, but in it is a bunch of podcasts. And if you're listening on it, it'll auto donate some amount of sats for every minute that you listen to the podcast, which is awesome. Because I have a podcast and I'm able to get paid from random strangers. I have no idea who's paying me, but they're saying, I appreciate you, Jimmy, for putting out some content and I'm taking time to listen to it on Breeze so I can pay you some money. And I've gotten paid not a small amount of money in some as a result of making that. Yeah.
Can children own Bitcoin legally?
Yeah, of course.
Do you have any children yourself?
I do.
How old?
Well, my oldest is 14, but he's still not quite ready to hold his own keys yet. So I have to handhold them through a lot of it.
So you're a 14-year-old. I have a 13-year-old. So what would be the best way that you recommend doing that for children?
Well, for now, I'm holding his Bitcoin for him. So I'm there. But at some point, I would want to teach them to be their own bank. Yeah.
But not at that age.
I mean, he's probably close because he knows some programming and stuff. And just want to be assured that he's responsible enough not to lose his private keys and things.
And what about people using Coinbase versus the software wallets and the hardware wallets? I have a Coinbase account. I use, what do I use? Exodus. Mm-hmm. And I don't know if that's the best one to use or not, or if there is a best one, but do you have a preference over hardware, software wallets or?
Yeah, I would definitely say hardware wallets are better in general. You're not going to shoot yourself in the foot or expose yourself to malware and things like that, which internet connected devices tend to have. If you are going to use a software wallet, keep the device offline and never connect it to the internet. So at that point, it's basically like a laptop that never connects to the internet. So it's like a hardware wallet already. So yeah, I would say that something like that. I recommend multi-sig if you can do it. If you need some help and you want some hand holding, I would recommend services like Unchained Capital. Full disclosure, I'm an advisor there, or something like Casa, where they'll hold one of your multi-sig keys and walk you through how to set it up and everything. So you're still in control of your funds, but like if something happens to you or you compromise one of your keys, then they can help you recover and do things.
And people can just go to that website and get some information.
Yeah.
For it. I'll look it up and we'll post it in there. So you have your podcast, you have your books, Programming Bitcoin, you have the Little Bitcoin book, Why Bitcoin Matters to Your Freedom, Finances, and Future. I read that book recently. It's a great book. I recommend it for anybody that wants to know more about Bitcoin. And then you have Thank God for Bitcoin, the creation, corruption, and redemption of money. Why'd you write that one? What was the motivation?
So it's first of all, the book is basically a moral argument for Bitcoin from a Christian perspective. And it started as sort of like a book club with a bunch of other Christian Bitcoiners that I had met. And we studied a couple of books, Ethics of Money Production by Guido von Holzmann and Honest Money by Gary North. Both are from the Austrian School of Economics and sort of give the ethical moral case against the current fiat monetary system. A lot of the arguments that I've given to you today are laid out in their books as well. And we enjoyed both books. The only thing about both books was the ending. The ending was essentially, hey, now that this is what we need to do, we need to go back to the gold standard. And we need to go back to the gold standard by convincing enough people to go back on the gold standard by lobbying Congress, getting a political action committee together. And I mean, at that point, you just sort of stop reading, right? Because it's like, okay, this is never going to happen. There's no way anybody's going back to the gold standard now.
I was just going to say that.
So when we wrote the book, we were like, okay, let's condense a lot of these arguments and give a more hopeful ending message, which is that Bitcoin is your way out. And you don't need a majority of the population to do it. You could do it on an individual by individual basis, and you can opt out of the system. And that's essentially the argument that we made in Thank God for Bitcoin.
Wow. Well, look, this has been very informative. You answered a lot of questions, and I think you gave a lot more information. You also have your website, Programming Bitcoin, and you have your course on there where you teach people, like you said. They can sign up for that. You have any classes coming up or courses coming up?
Yeah, I have one coming up in Mexico. It's out on the West Coast, August 10th and 11th. And it's 2 full days, and it's a fire hose of information. So come prepared.
and pay you in Bitcoin, right?
Yeah, that's right.
Okay. Well, I want to thank you for being on the show. You can find Jimmy also on Twitter, Jimmy Song. He's on LinkedIn. I'm going to put all the links in the episode page as well, along with his website, links to his books, podcast, everything like that. So been great speaking with you, Jimmy.
Thanks.
All right. Have a nice day.
Hey, everyone. If you enjoy these episodes here on the show, please don't forget to follow us on your favorite podcast platform wherever you listen to audio. It's a great way to be reminded when new episodes are released. You can also rate and review the show as well, which helps to spread the word to new listeners. Also, if you're interested in trading the financial markets and curious about stocks, options, futures, Forex, and more, please head over to my website at rickmazer.life. Be sure to join our mailing list. We are currently in private beta with Enlightened. Enlightened is a trading community and will provide great information and lots of free resources. We have tons of things planned for expansion to give anyone interested in becoming better at finance, investing, and trading your money some great opportunities. Get on the mailing list today and let's get trading and better at managing our money.
So that's it for today's show. Let me know what you thought of it. I'd really appreciate it, and it will help make these shows better for you. Feedback is a very valuable tool to get better at anything. You can hit me up at Twitter at rickmaz1106, that's RICKMAZ1106, or on Instagram at rickmazer1, RICKMAZUR1. Use the contact form on the website, rickmazer.life, and we'll also have everything in the comments section for each show page. I personally look at all the feedback on the site as often as I can. Finally, if you have anything to contribute or ask, or would like to appear on the show through an interview or one of our other segments, you can leave a voicemail at 1-800-590-0174 or by contacting us on any of our socials or use the contact form on the site. We'd love to hear from you. I consider us all a community, a group. Let's remember, in today's more challenging world, we are people first. We're humans who just want to be treated as such and live in a place where we can all prosper and live well. Bye for now. Until next time. See ya.